In this video, I'm going to show you how to pick multi-bagger stocks. Now, in the last 2 months, I've been keeping track of all of my trades that I posted on the private Discord server. In the last 2 months, we have had 11 trades that have been multi-baggers. AMC stock, 900% returns. CVNA, 950% returns. LNG, 250% returns. 6, 791%. SE, 375%. Twitter, 288%. Apple stock, 850%. TBT, 338. Nat, 291. Shopify, 131. Hood, 323. And QuantumScape at 295% returns. And these are all trades that have been posted on the private Discord server under the We Are Investing channel. You can get access to this Discord server by joining the Patreon. It's super cheap. It's only $5 a month. You'll get watch lists, live trade alerts, stock market news, and updates, and you'll be part of the community where we learn together and grow together. A link is down in the bio. Now, I'm going to show you on this video the process behind entering into all of these trades, because the process is the same. So let's get started. Before we dive any further into any trade, we take a look at the technicals. Now, me personally, I look at the daily, weekly, and monthly charts, and I try to find support and resistance levels. We're looking for key levels where the stock has either bounced or been rejected many times. Prior resistance turns into future support. Prior support can also act as future resistance. It really depends on the overall trend of the stock, but these are key levels where it's likely the stock is going to bounce or be rejected again. And we're looking for that prior performance to predict or add a level of probability to future performance. And with stocks, we're trying to predict the future. So this is very important. Now, if we take a look at a stock like Apple stock, we can see that this stock has bounced many times before at this level. The level is under $140. The stock is selling off. So in this case for Apple, under $140 would actually be support. Once we have identified support and resistance for a particular stock, we take a look at where the stock is trading right now. Ideally, what I like to do the most is to find a stock that's actually in between support and resistance right now. This means that there's a good chance the stock's going to either move up to resistance or down to support. I like stocks that are in the middle of a range because there's a good chance that's going to move in either direction, and I'll take those chances. You can also trade stocks that are at support or at resistance right now. After we found stocks that have good technicals, the next thing we do is we look for any potential catalyst. A catalyst is going to help accelerate that move to the upside or downside, and that's going to help with our options volatility and our options returns. So if we have a potential catalyst coming up, this isn't crucial. It's not needed, but it's a bonus, and I like to find stocks that have catalysts coming up. Then we can move on to step number 3, which is taking a look at the options chain. And this is where the magic happens. Now, me personally, for all of these trades, what I use are debit spreads. These are vertical spreads, and we trade either call debit spreads or put debit spreads. We'll trade a call debit spread when we think the stock's going to go up, and we'll trade a put debit spread when we think the stock is going to go down. Now, for all of my trades, I look for a risk-reward ratio that is 10-to-1 or higher. So to keep it simple, let's assume a $1 spread. So let's say we're going to do a call debit spread on whatever stock. And let's say we think resistance is at $100. Well, I can buy the $99 strike and then sell the $100 strike call option against it and enter into a $1 call debit spread. The max that I'm willing to pay for that for a $1 spread would be $9 per contract. I could win $100 or I could lose the $9 that I put in. There's my 10-to-1 or higher risk to reward ratio. That's what I personally look for. If it doesn't give me that kind of ratio, then I don't want it. I don't want to trade it, and I got to keep all of my trades at 10-to-1 or higher for consistency. I don't want any trade to weigh more than another trade and not give me the same potential return. So for me, I keep it at 10-to-1. For you, maybe it's 7-to-1, maybe it's 5-to-1. You have to do your own strategy, but that's what I personally look for. The next thing that I do that's also critical is that whenever the stock doubles, if I can get a double in my position, meaning I'm up 100% on that options contract, I then proceed to sell at least half of my position. This now provides me the opportunity to stay in the trade, but absolutely risk-free. Because when I sell half of it after it's doubled in size, I've taken out my initial investment or my initial capital. Therefore, all of the money that's left is house money, and it becomes a free trade essentially at that point. The reason why I do this is because I never want a winning trade to turn into a losing trade. Also, it removes most of the emotion left in the trade, because it's not my money, it's house money, and it'll allow me to let the trade just ride. This will prevent me from looking at the stock every 10-20 minutes to see if it's up or down. It also won't make me so jittery when I'm down, be like, do I have to cut now, cut my losses? And when the stock is up, I'm less likely to sell and not be able to capitalize on those huge returns. Now this is going to reduce my overall return. I'm not going to get 10-1, but I'm still going to get a ton of money. So that's what I do personally. That's my process for every single trade that I enter into. If you'd like to be notified on future trades and join the community, you can do so by joining the Patreon. A link is in the bio. If you have a great process that helps you find multi-bagger stocks, please share below in the comment section as well. Outside of that, I'll catch you on the next video. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya.